Hey everybody, Jerome Maldonado. Welcome to Wednesday's Real Talk on Real Estate. So next week, we're going to be doing it from Florida. I'm going to be in Florida for a week. My kids have a football camp. Well, my son has football camp. My daughter has a little bit of gymnastics camp. And we're heading to Las Vegas, Nevada tomorrow. And we'll be working with Brad Lee. He's going to be working with us on some VT Lightspeed stuff. And then we're going to be on the Dropping Bomb podcast, so we're excited about that. So we'll be able to spend some time, talk shop, talk shit, talk shop, and hang out. So anyways, it'll be a fun trip over. But today we're going to be bringing you guys some updates. And so I did some research on a bunch of stuff here. And so today's updates are going to be primarily focused around the U.S. economy, okay? The updates, the U.S. economy, high interest rates, moratoriums, and the printing of money, okay? And so one of the big things that I always talk about is how it relates to real estate, because that's what I care about. It's my business. Most of you guys who follow me care about the same thing. For those of you guys who are business professionals, entrepreneurs, you should be paying attention to this, even if you're not in real estate, because I'm also a business entrepreneur and have been for over 26 years. And so understand that everything that's happening right now, if you follow the world, history, and everything that's going on, if you follow it and understand it, you can leverage yourself to take advantage of it. So many people in America become victimized, right? So you hear it, you see it all the time. Everybody's a victim. I can't tell you guys how many times I show up to deal with a client or just deal with stuff in general in life. And you know those Debbie Downers, everybody's rant, and they're just ranting and raving about how their whole life is upside down. Well, look, my life is never upside down. There's unfortunate circumstances that happen from time to time, like they do for anybody in life. But it's how you deal with those circumstances. And so, it's a lot of 99% of success is truly mindset. And I shouldn't say 99%. I'll say about 87%. Okay. Not even quite 90, because I'd say there's at least 13% of application and wisdom. The rest of it is mindset. Think about a professional athlete, ladies and gentlemen. When you think about a professional athlete, this is what I tell my kids. I say, look, you're setting yourself to go up and compete against the best, but they're the best that are most well-equipped mentally, physically, and athletically, right? And so if you think about it, a lot of these pro athletes are trained the same. They have aspirations and they have training that has been pushed to them and embedded into them for life. The difference is the ones that really make it to success are the ones that have the right mindset and believe it, right? The ones that believe that it's tangible. The ones that cannot believe that it's tangible and they feel like that they can't get there, those are the ones that are most affected. And so I always tell people that it all starts right here. And I tell my kids, look, you got to get past the mindset thing. If you go in scared, if you go in apprehensive, if you go in unsure, it's going to show on the field. And so same thing happens in the world. So when we talk about U.S. economy, we talk about high interest rates or the interest rates rising. We talk about the moratoriums, the rental moratoriums, hyperinflation, housing market issues, so forth and so on. You can either be a part of the problem or a part of the solution. And so my mindset always goes as part of the solution because I'm very optimistic. I have a very high risk tolerance in life, and I've lived my life with that real high risk tolerance. And because of that, I've been able to go out and push to a level of financial success and financial freedom that most people in the world will never get to. I understand that. And that's not what this is about. This is for you guys to be able to pivot to the next level where you guys can benefit from what the world truly has to offer. And so some people are sitting back watching the news, and the news makes it look like the world's crumbling down on us, right? Oh my God, interest rates are high, the housing market, there's not enough houses on the market, and the US economy is experiencing hyperinflation. We're gonna be spending $20 for a loaf of friggin' bread, right? So you sit back and you can look at it like that, or you could sit back and say, okay, how does this really work? Why is this happening? And how am I going to be affected? How is the world going to be affected? And knowing how it works and how you're going to be affected by it, then you can position yourself to take advantage of it. Because there are people, ladies and gentlemen, profiting from it. So if you look at the world and the way the world goes, it's not just the ultra wealthy that are benefiting from it. There's a lot of people in between, and there's a lot of wealth in between that's getting filtered into the pockets of US Americans, just like you and I. And that's where I position myself. I'm not going to sit here and tell you guys that I'm competing with the Elon Musks and the Bill Gates and the Jeff Bezos of the world. But what I'm going to tell you is that we're sitting in the upper echelon of the top 1/10 of all money earners since the history of Adam and Eve. Now, how do we get there? How do you get there? How do you position yourself to get out of the norm, right? So that you can go out and take advantage of some of this stuff, understanding and knowing what's happening. So all of this, ladies and gentlemen, everything that's happening right now starts with government and the Federal Reserve, okay? The central banking system. And what most people do not realize is that the central banking system controls the Federal Reserve. So if you're making your payment to Chase Bank, which is actually JP Morgan, if you're paying to like Bank of America, Merrill Lynch, the big banking institutions run the Federal Reserve. They loan money to our federal government. Non-constitutional, but it's been happening since 1912, okay? And so understand that banks make money how? Okay, that's the question. How do banks make money? Banks make money by taking people's money and lending it out to other people. Well, if people don't have money for them to take, what money do they lend? And so what they do is they're printing money and they're handing it out to the US population. So now people have some money, they put it in the bank, they spend it, they put it on credit, and then for every single dollar that's printed, they can lend 10 times on the amount in loans to our people to buy houses, to buy cars, to do everything. So like in the automobile industry right now, the most money is not made from the resale of cars or the sale of new cars and the profit margin. In fact, there's such a small, if any, profit margin anymore in the automobile industry. Where they make their money predominantly now is on paper. And what I mean by that is they sell notes. They're selling loans. And so the dealership with the largest number of notes is the most valuable car dealership in the world. And so what ends up happening is you go to a lot of the mom and pop shops now where they're selling cars. What happens is you go in and they don't tell you what the price of the car is. They tell you what your monthly payment is going to be. And they sell you that car based on what you can afford on a monthly basis, not the car. So you're probably paying 2 times an inflated value or 3 times the inflated value of that car over the course of the note of that car based on the interest rate. And so then the car dealership sells those notes to an institution and they buy those notes from an inflated price from the car dealership. And so they make their money on the note. So the CFPB regulates all that. So the housing market works the exact same way. So Fannie Mae, Freddie Mac, FHA, VA loans, government assisted loans, all that stuff is for the benefit of what they like to believe is you guys, the American people, and that you're going to take the most advantage of it. But really it's for the central banking system because it's what runs and controls the financial sector of our US economy nationwide, right? So what happens is they want to be able to give those notes out so that they're making their money on paper, because money sitting in the bank, ladies and gentlemen, is absolutely worthless. And that's why it's the same thing for you. So if you exercise your life the same way the banks exercise their institutional money, you win. Now, how do you learn how to do that? What you learn right here. And so, ladies and gentlemen, that leaves us with one thing that we're unfulfilling today, and that's a thumbs up. If you like the content that I'm talking about, you want to hear more about the US economy and updates, high interest rates, and how our economy is affected, give us a thumbs up, pound that thumbs up button, and pound and subscribe to that little bell on our YouTube channel for more content just like this. Now, ladies and gentlemen, we know that interest rates are starting to go up. And so over the course of this year, we're expected to see 4 to 5, analysts are telling us, right? So Jerome Maldonado isn't telling us, analysts are telling us that interest rates are projected to go up to 4 to 5%. And so how does that affect you? Well, that means that less people can afford more expensive homes. So we know that that's going to hit the market slightly different. We know that there's an inventory shortage. And so what the Census Bureau is telling us is that we're 5.5 million homes short. So we need 5.5 million rooftops in order to fulfill the current need for the lack of inventory, 5.5 million homes. And so, ladies and gentlemen, if we're 5.5 million homes short, of being able to go out there and fulfill the current inventory crisis need for rooftops, how do we fulfill that? That's the question. And if you guys have questions on this, you guys are welcome to put them in the chat. As we get to a point where I can answer some questions, I will. But understand that you would think that builders would just be going gangbusters on trying to go out and build as many homes as humanly possible. Well, look, I'm a builder and developer. I've been building single family home residential subdivisions for over 20 plus years. And I only build spec homes. So we don't build like tract building or program subdivisions. But one thing that I learned how to do was buy land and build houses. So one thing that I caution people to do right now with everything that's happening, and this is what is really important. You guys are going to want to listen to the next 10 minutes here, because this is super important, because this is how my brain is thinking right now on how we're exercising and facilitating projects and business as developers right now. And so you're going to want to know what's in the brain of a successful multi-million-dollar developer's mind as you're moving forward, so that way if you're starting or you're somebody who's just building one home and you want to elaborate on that and grow, pay attention, because you don't want to get caught with your pants down and in a bad circumstance where you're financially out of pocket, right? And so we sit back, we look at the moratoriums, we look at everything that's happening right now where we're doing moratorium extensions. People that have the rental moratoriums extended to the end of June, and they don't have to pay rent until next month, right? So that's coming to an end now. And the state of California is looking at even extending that out to September. And so if California, one of the third largest world economies, is extending it out to September, how does that affect the rest of the nation? Are other states going to follow suit? How does that affect housing, multifamily, so forth and so on? And so I think instead of, we're pumping trillions of dollars in money back into the American public's hands, right? And unemployment, free capital for the pandemic relief funds. And so back in March, they signed the bill for $1.9 trillion of additional relief. And so my whole thought is thinking, okay, we could put that money back in the hands of the US people, okay? And so you have an extra couple $1,000s back in your pockets. Great, everybody's excited, right? But follow me here. Housing needs, housing projects, and so forth. Right now, there's hyperinflation. Housing is through the roof. We're starting to see now interest rates rise along with prices. Is this going to be able to continue? And so as a developer, I look at this stuff and I say, okay, instead of going out and giving money to the American people, why don't they give it to home developers? And here's why. Not to sit back and say, okay, let's funnel more money into the pockets of Jerome Maldonado, the people that are already getting wealthy. That's not why. But it's based on risk. Because see, through our educational platform, the Elite Real Estate site, I have students that are working with us and they're telling me, Jerome, are you comfortable with this, buying this piece of land and building this house? And I caution them in certain fashions. And there's people that want to go out and start developing subdivisions. But here's the thing. Do we really know how our economics are going to sit in relation to the housing market in 2 years from now? Because that's how long it's going to take you to develop infrastructure, okay? And so if you go in, you buy a piece of land, and let's say you're going to put 50 homes on that land, and you're going to subdivide it. By the time you get engineers, you get hydrology, the grading and drainage for the property, you pull in infrastructure, utilities, put in roads, curbs, gutters, and the whole 9 yards, you're 2 years away from turning dirt and you're 2 years away from turning a profit and putting anything back in your pocket. Now, ladies and gentlemen, do you have a crystal ball? Can you rub that crystal ball and tell me exactly where the housing market is going to be in 2 years? Well, as smart as some of you guys think I might be, I'm not as smart as you think I am, because I don't have a crystal ball. But what I am wise enough to do is exercise things based on caution. And so when I go in and I'm looking at developments, I sit back and say, okay, what's our affordable experience where we know that we can handle if something happens and all shit hits the fan and the market goes dry, right? Which I don't believe is going to happen. But let's say that the housing prices drop 30% in 2 years from now. Can I still make a profit, and is it worth my time? Okay, so understand, if the federal government, instead of giving bailout money to the American people, instead, if they gave it to developers, where they supported developers in putting these 5.5 million homes on the market, I know that I would have. Let's say I got a tax abatement alone, and I got a tax abatement on the whole project alone. I would be more than willing to start turning more dirt on that project. Not only that, I would feel more comfortable knowing who we're going to be in 2 years because I have the support of our federal government through the bailout money. Our municipalities are supporting us, right? And here's what it does. It doesn't put money and wealth back into my pocket. Yes, we're going to make a profit on it or we're not going to do it, but it'll protect me from being able to go bankrupt on a project or not make almost anything in the project and make my time not worth it, which makes me not want to do the project because no one works for free. Ask yourself, do you wake up in the morning and go in and work for free and not expect a paycheck? Is there anybody out there? Let me give you my phone number because you can come work with me because I'm more than happy to employ you for free. But for the rest of the real population that knows that the world functions on finances and money, they need to get a paycheck. And so understand that that's important. But I know that if they supported that, I would be building more houses. I know that if they went out and supported the big builders like D.R. Horton, Toll Brothers, LGI Homes, all the big publicly traded builders, they would feel more comfortable going gangbusters on it a little bit harder as well. And here's why. And here's how you benefit from it. So builders start going in. Now we fulfill that 5.5 million homes on the market. Is there mass appreciation? Now, is there an inventory shortage? The answer is no. So what happens to the market now that we've been able to fulfill the inventory issue? The market stabilizes. Housing prices become more affordable. So what that does for the American people is people like you and I, average Americans, can now start to afford to get into single family homes. Everybody's had an aha moment right now. Click that thumbs up button if you want more content just like this and you like the information that we're talking about here. So understand that it's really important that we give capital to the people that stimulate the economy. So for those of you guys that are interested in putting money into the economy and being able to get a little bit of money back out and being able to generate a profit and be able to set yourselves up, the important thing is to be able to get governmental support. And so if our federal government supported the developers to create the need for to be able to support the need for them to build, they would feel more comfortable developing, and it would benefit everybody because the housing crisis would start to stabilize. And so what's happening now is we're going to start seeing interest rates go up. And so for those of you guys who've been following me for a long period of time, I talk about this a lot. And I started talking about this in 2019 after my exclusive and hard search for multifamily all over the Southwest. I ended up buying 2 apartment complexes between 2016 and 2018. And then I sat back and scratched my head and said, damn, these prices are super inflated. Little did I know that they were going to inflate even more, right? So I didn't buy as many as I probably should have, but we continued to buy. But point being is that in 2018, I knew that our economics just didn't support the growth that we were going through even back then. And so one of the big things that I cautioned people, I said, look, here's how the Federal Reserve works. Here's how our central banking system works. And here's how our federal government works. And if you know how all this stuff works as a working machine, you can kind of follow how the economic bell curve is going to work with our stimulated markets and then our crash, our stimulated markets and then our crashes. And if you look at history, back from the early 1900s to today, and you follow it even just as short as the Great Depression to today, you'll notice that there's something consistent in that bell curve. And the most consistent factor in that bell curve is that every 10 to 13 years, there's a major economic adjustment. And so the economic crisis of 2008 hit. And so we get to 2018, 10 years later, and I sit back and scratch my head and go, okay, I'm starting to see some similar patterns as I was seeing back in 2006. And so we've been a decade into this from post-recession. Okay, how is this going to continue the way it's going? And so here we sit, 2021, 13 years later, and lo and behold, it is the pandemic that lands up affecting the market, right? So the US government steps in. They said, oh my God, there's a crisis. It's called the coronavirus. And here's the deal. We're going to pump money into the economy since we're shutting down all the businesses across the United States. And we're going to help you Americans. Oh, P.S. by the way, we're going to allow you Americans to come in with D credit and buy homes. And they start just pumping money into the economy, printing money. And then all of a sudden they lower the parameters for home buyers and they start giving loans. And so they're giving loans to people that shouldn't have loans. They're lending money to people that shouldn't be lending money to. And now all of a sudden there's this housing need. And so what lands up happening is they're going to land up just shutting off the switch as interest rates rise. and then all this decredit's going to go into foreclosure. And then guess who gets to collect all of that real estate back into their portfolio? The Federal Reserve. And then they'll let it back out as REOs and as foreclosures. And so they end up generating more capital because they've lent money on that, and they're lending 10 times what they printed. And so now they're making interest on it. Then they take ownership of all that real estate. Then they release it back to the market, and it's just a vicious cycle. And so there's a lot of logistics in there. And I know it's hard to understand 100% of all of it, but in layman terms and in a nutshell, that's what happens every 12 to 13 years. And it helps parlay the central banking system. And so right now we're seeing hyperinflation. And I know that builders are sitting back going, okay, crude oils are going up by 40%. That affects paint prices. It affects PVC, petroleum-based products, where they're going into PEX lines and PVC lines and so forth, poly lines that are used for plumbing, heating and cooling, stuff like that. Lumber is still through the roof. And so some people are going, well, it dropped 30% last month. Well, great. It's up 280% in just the last year and a half. So if it's up 280%, a 30% drop, ladies and gentlemen, is really a small margin of where we need to be able to make things more affluent. But it's a good start. Now, is that going to continue? We start seeing some of the Canadian lumber mills start to open up. And we're starting to see some of that stuff getting distributed into the States, which is great. And so one of the big things is we're going to start hopefully seeing a little bit more material stabilization over the course of the next few months and moving into 2022. And so it is going to be a good time to build. Now, how does that affect you? If you guys are investors and you guys are looking at wanting to go in and start taking advantage of the housing market, how can you do it? So, ladies and gentlemen, I do things based on exercising everything on a caution, basing it on the caution of error, okay? So meaning that worst case scenario, let's say that the economics dropped 30%. What's your time worth? And even if it's not worth your time, what return would you take under a worst case scenario if everything fell apart economically? Okay, and that's how you underwrite a deal right now. That's how every single one of our housing development projects are going right now. We're working here in the New Mexico, Albuquerque, Santa Fe market, and we have stuff going on in the Seattle market. That's one of our biggest development projects that we have going on right now. We have stuff going on in Palm Springs where we're building single-family homes, and we're going to be exercising some Airbnb and short-term rental stuff. But we're doing them we're affording those through the means of buying land and building houses. And then we have our project for multifamily that we have going in the Phoenix metro area. And we have some massive homes going on in Puerto Rico. Oh, this is cool. So we sit back and you look at everything that's happening, right? And there's money being made right now, ladies and gentlemen. One thing that you need to know about money is there's no shortage of it. There's plenty of money out there in the world. And here's living proof. So Ty calls me up 2 years ago. He says, Jerome, we need to be in Miami. It's an international market in Miami, and the market's it's so affluent. It doesn't matter where you go. You talk to an investor down in Dubai, you talk to an investor anywhere in the world, they know Miami because it's the gateway of Latin America, and it's a worldwide market. And he said, we need to be investing in Miami. So 2 years ago, we go to Miami, we start looking at properties, and we start facilitating business in Miami. Well, lo and behold, all the tax stuff that's happening, companies start moving down to Puerto Rico with everything that's happening right now, because Puerto Rico, you have a 4% tax rate over there. That's federal and state. Total taxes, 4%. So large money is moving down there. Well, so I'm watching the Mayweather fight with Logan Paul the other day, and Logan Paul sits back and goes, and they announced that he's from Puerto Rico, that's his primary residence. And I'm sitting back going, no kidding, So Ty, being the grandfather, the grandfather, Mac Daddy of moving social media influencers down to Puerto Rico, Logan Paul starts looking down at Puerto Rico. Well, we go in. There's 2 condos that we acquired down there in the Los Estancias subdivision, and then we bought 2 vacant lots. We have a general contractor building out 1 home that we're building out, probably about a $7.6 million purchase, and the house is going to get listed if we decide to sell it. It's going to get listed for $15.4 million. Guess who was in Puerto Rico looking at homes 3 days ago? Logan Paul. And he was out on the same area that we're out there. Why? Because it's the most beautiful area in Puerto Rico. And so Logan Paul was out there looking at it and inquiring about one of the vacant lots that we still haven't turned on construction. And so the question was from our general contractor, would you consider selling the vacant lot? Well, let me see here. We paid 2.1 million for it. And if we can get 4.1 million for it and make 100% return, is it worth the return on investment? And so if we can double our money on it, yes, it's a stupid yes. And so zero liability, we turn the lot, we make a profit, right? Same thing with a house. We build a house for $7.6 million and sell it for 14.5 after negotiating, or 15 million. Is it worth the profit? And so one of the big things is people are deploying their money out into Puerto Rico for that purpose because it's tax-free capital. Federal income taxes out there, he doesn't have to pay. If he's in LA, he's going to pay close to 60% in taxes. He moves to Puerto Rico. We're hitting the market sector of the ultra wealthy. So it's just a small sliver of a market sector that you can hit. So we're not going gangbusters building 50 homes that are $15 million, just one or two, because that's all it takes to be able to turn a reasonable profit and then deploy that money and expense it into something bigger where you can go off, have some tax write-offs, deploy it into something bigger, and then have multiple units to pay you out residual income over the course of time. And so that's one market sector. And so what we're doing and how we're exercising the stuff down in Seattle, Palm Springs, California, is we're sitting back and we go, okay, let's not go gangbusters. Let's build a few homes. In Palm Springs, we're doing 3 at a time. We're going to do 6 of them to test it. We're going to do 3 and then 3. And we could sell those. And the thing is we have profitability of someplace in the neighborhood of about $160,000 in profit. So if the market drops a little bit, and let's say we lose 30% of our profit, or 30% of the sales price of that home, affecting our profit by 30%, obviously. So if we go in and we make even $100,000, are you going to feel sorry for us? Am I going to feel sorry for you? No, because it's still profitable, but we're doing it in small sectors. The way you get ahead of yourself is when you buy vacant land, because land is not income producing. So what ends up happening with vacant land, because it's not income producing, is you get stuck with it. And it's called trash can money when you have to service the debt of that land to be able to afford the land if something goes south on you, because now you can't produce it, you can't turn it. So the biggest thing is banks start slowing down how they're lending money on that asset. So if you have all this vacant land, you start developing it and you get stuck with it, what do? And so you have to be able to either pay it off and own it cash, or just be able to sit on it for a long time. We still have land that we're sitting on from pre-2008 recession. So for you guys, if you go in and you just buy one lot and you're able to start building houses right away, you don't have to worry about subdivides, infrastructure development, electrical, utilities, all that stuff. You can just buy a lot, then you can go in and get permits and start turning a profit immediately. Knowing that there's a need for rooftops, it's either going to be rentals or rooftops of single family homes. And so the question is, which market sector are you going to be in? Multifamily or single family? We choose to buy land, build houses so that we can go off and generate money to be able to deploy into multi-unit real estate through the means of buying land and building houses. And then we deploy it elsewhere. The same thing that we're doing up in Seattle. Huge tech rush of employees moving in. There's no slowdown of the tech industry right now, where it's only progressing. The need for housing is going to be even more plentiful. Even if things fall apart out there, it may dip for a while, but it's going to go back up. And so even if it dips, we have a business plan where we can lease and rent the property. Now, if we lease and we rent those homes, our 25 units, let's say we had to rent all 25 of them, which the chances of that happening are slim to none. But even 50% of them, if we had at least 12 of them, we can go out and we can get institutional money based on the income model of the rental income on those projects, where we could still afford to get investors out, and we have a viable product. Or we sell them for a discounted price and everybody gets paid out. We take a margin cut, but we have a margin profit up there on $1.1 million homes, where we make $250,000 to $300,000 per unit. We can afford to take $100,000 hit if necessary. Now, do we want to do that? Absolutely not. But if we had to, we could exercise that model and take a depreciated value, or just lease them. And so what I'm telling you guys, with the housing market the way it is, money is inexpensive right now. Yes, interest rates are going up, but I'll tell you, even with interest rates going up, you don't want to overpay for land. And everything that we're doing right now, the whole key, the whole secret, you ready for this? The whole secret, ladies and gentlemen, is in the land itself. Okay, so if you're buying value add property, or if you're buying land to build or develop on, the value of that development is in the land. The value of that project is in the land. Exactly what we're doing in Phoenix right now. We're able to go in, turn 31,000 square feet of office building, dead office building, on the market for 2,000 days, ladies and gentlemen. Nobody wanted that stuff. You could basically go in there and level it and probably sell it for more than what it was worth. We were able to go in there and negotiate a price on it, buy it for pennies on the dollar, and then we're able to go in and turn the 31,000 square feet into 54 units of multifamily. Not only that, we have acreage in the back. And so now we can go vertical with additional multifamily, because guess what we have zero expense in, because we've already bought the property based on the distressed value of that financial model of the office. We bought that property at a discounted price because nobody wanted it. You couldn't do nothing with it. So you have to get creative. So how do we get creative? Just turn it into apartments. How do we turn this into apartments? And then that's where the creativity goes. So we start turning that into apartments. But guess what we have in the back that's free? Land, ladies and gentlemen, land. So people go, well, aren't you willing to build at a time when where material costs are so expensive? And I sit back and go, yes, because I got free land. I got free land. My profit margin, because I have free land, is going to go through the roof, because I had to pay nothing for land. And the biggest expense is infrastructure development and land. Ladies and gentlemen, we have infrastructure. We have to add some transformers. We have to pull some water lines to the back. We're going zero gas, all electric, and we're even getting a rebate from the utility company to put in additional transformers. So essentially, over the course of time, the electrical cost is almost zero over the course of time, which is really sweet. Not only that, we get a tax abatement because it's an improvement district and the city wants to see the project go. They want the redevelopment. So now we have no property taxes. We get no property taxes. That alone is going to make the project more profitable by well over 7 figures, ladies and gentlemen. And so how do we go in and we make projects work? Land, ladies and gentlemen. The price for land. And so if you can go in, find a lot that's reasonable through our same business model, and the lower you pay for land to be able to build an asset, the more profitable it is. Why can we go out to some of the areas in California where most land is super expensive? Well, if we can buy land for under $50,000 a lot, and I don't have to do any development to that land, I can throw a septic tank in the back, and I can build a big, nice house, a 2,400 square foot house, sell the thing for $550,000 to $600,000. Ladies and gentlemen, my profitability goes up. And so same thing with any value add property, any type of distressed asset, or just buying land and building houses. Ladies and gentlemen, your profit is in your land and how you buy your land. Your liability is also in your land. So if you overpay for your land, your liability sits in that land. Why do we not go in and buy real estate to develop subdivisions anymore, vacant land, cash outright like we used to pre-2008? Because I still own shit from 2006, 5, 4, 3, 2, 1 that I still have sitting out there collecting more dust, dirt, and people illegally dumping on them because we went out and bought them cash, and then the market shifted. And what happened was the city development plan was going this direction, then it was stagnant for 5 years. And so as that stagnant form of 5 years, the market shifted a little bit like this because hospitals and schools started going in this direction, and they annexed more land in that side. So my land that sits here is still sitting there, not worth less money, but if I develop it, I make less money on it. So instead of doing that, we go in and we buy it on an option to buy, and then we start working on it slowly and developing it. And then we go in and develop and start turning dirt. So ladies and gentlemen, your profit is in your land, your liability is in your land. Don't overpay for your land. Don't pay for it cash if you can afford not to. Do as much due diligence as you can to push forward through your project, permits, infrastructure, utilities, anything you can. And then when you get through 2/3 of the way, then buy the land, push forward on your project, make a profit, and you'll be more successful. If it becomes a liability, you shave off the liability, you dust it off, any small infrastructure costs that you had incurred, you just go on to your next project, you write them off on your taxes, and you move on to your next project. The best way to do that is when you're already making profits doing something else. So my recommendation to Americans right now is fix, flip, or exercise burst strategy. I'm not a fix and flip guy. So I'm going to be real honest with you guys. Not my business model. I hate fix and flips. If you want to fix and flip, go fix and flip till you're blue in the face and have a good time, great time doing it, ladies and gentlemen. More power to you, more blessings to you. Not my business model. I'm not gonna do it. There is profit in it. There's just way more profit with way less stress buying vacant land and building homes new, because you know what your variables are. You're building it new. You know what to expect. You can reverse engineer the build and you know what your expenses are from day one. And so that's our business model. Then we go in and deploy that money into multi-unit real estate for long-term wealth, residual income, and retirement. And that's how you go out, and that's how you take the U.S. economics, ladies and gentlemen, and that's how you profit from it. So for all of you guys that didn't listen to the beginning of this video, joined in later, you're going to want to rewind, hashtag pound repeat, pound subscribe to our YouTube channel. Give us a thumbs up if you like the information I'm giving you guys on how to take advantage of this stuff. I should see those thumbs up buttons going up right now because I'm giving you guys gold in information. And so, ladies and gentlemen, when we talk about the U.S. economics and we talk about high interest rates going up, moratoriums being extended, and more money being printed, you can either be affected by it or you can be a part of the profits. It's up to you. I choose to be a part of the profits, ladies and gentlemen. And so I'm teaching you guys that you can do the same and how to do it. Let's see here. We have a couple questions rolling in. Benny, do you invest in international land? I don't. Puerto Rico is the most international land that I've invested in. I will tell you, though, that Ty and I have talked about this, and we're going to start investing in international land because with Bitcoin and all of the cryptocurrencies and stuff, we're going to become an international currency at some point in time, sooner than later. And so as the world starts to unite with, we're already uniting with these right here, smartphones, right? Technology. So we are an international commerce right now. So the world functions together commerce-wise because we are in an international commerce right here. And it's technology that's taking us there. And as we get into cryptocurrencies and Bitcoin and Ethereum, all of the cryptos, we're going to become an international commerce, okay? And so what's going to end up happening is it's going to become safer and safer and safer to invest in foreign markets. Years back, I used to get a lot of offers to invest in foreign markets. I never would do it because I was scared. I was afraid to go in and invest in a foreign market and then lose my ass or get taken. And in a lot of foreign markets, you can't own the land. You can own the real estate. So you can own like the condo or the real estate that sits on the land, but you yourself can't own the land. So you have to be able to know somebody that you trust and like to buy and own the land under in order to build and develop on it. Or have a partnership that works. And so that's a little scary if you don't know people. And I didn't know as many people that I trusted worldwide. Now we're changing that because of this international commerce. So Benny, in due time, it's starting to happen as we speak. And so, yes, we're starting to explore international markets and buying land in other countries because one, there's other countries that have better benefits than even the U.S. As great as we are, as the United States is, there's better places to live for certain different aspects, right? The U.S. is great for some, but there's other places in the world that are better to live for others. And so, yes, we are exploring investing into international market sectors, but as of right now, we don't. Puerto Rico's as far out of and it's a U.S. territory, so I wouldn't even consider that foreign land because it's a U.S. territory. Okay, Ben, what is the average cost per square foot look like in Albuquerque, Santa Fe right now? Oh, it's all over the board, Ben. It's all over the place. So you got to go into different market sectors. I mean, you go to Santa Fe, you can get as high as $400 a square foot or better in Santa Fe in certain areas. You go into Las Campañas and those areas. You come into Albuquerque, it can sway anywhere from $150 a square foot, $135 a square foot, as low as $135 a square foot, all the way up to $250 a square foot, and even close to $300 a square foot in a couple of different areas. So it just depends. You just got to really go into your market area and figure out what areas you want to develop in and build in, and then see what the price per square foot is going for in that specific area, because each area in your own city and municipality is going to vary in market and asset classes. So you want to make sure you do your asset class in the right area instead of doing it citywide, because citywide is too broad, believe it or not.
Yes, question.
How do you feel about building small multifamily properties? I love it. We're doing it. We're already doing it. We have 48 units that are going up, new construction on that 54 units that we're doing in the metro area of Phoenix right now. We're undergoing architecture work right now, and we should have permits here in the next 3 months for the new build. We're going to start working on the renovations here in the next 30 days. So yeah, we're doing it. And then up in, my son's going to a football camp that I methodically put him up in the last weeks of July because I had to get up there. And so the last week of July, we've been negotiating some commercial land up in the Seattle-Tacoma area. We're working on trying to get some tax abatements and doing an improvement district area where we can tear something down and redevelop. And we're doing a small multifamily development. In the New Mexico market, it sounds like you're here, Ben, in the Albuquerque Rio Rancho market. Yeah, there's good money in it. The only problem with Albuquerque is getting municipal support. I can just do things quicker and easier in states that support what we're doing. So I go to a red state and get a little bit more traction quicker. And so nothing against any blue states. You know, I love where I live, the mountains, the outdoors, and everything that we got going. I can just get more done in Phoenix. I can get more done in all over Arizona, Texas, and other states than I can get done in states that don't support our growth. So the city of Albuquerque will tell you they support your growth, but they don't. They fight with you. The municipal, the planners and stuff, they fight with you. And so it's not even worth the fight. I've learned to go in, talk to them about projects, and I move forth where people want to work with us. They want the development. They want to support us. I got a meeting with the mayor up in Arizona on Friday morning before I go on the Dropping Bombs podcast. And I mean, the mayor reached out to us. We want to get us on the phone. How often does that happen? You know, not very often. But when you're dealing with a municipality that wants to see the growth, they want to support the growth, and they're going to support you, that's when it happens. And that's when you know you're building the right city. So I love building small multifamily. I'm just going to do it in areas that support the growth. And I feel warm and fuzzy building it. So that's all my suggestion is to you guys. Make sure you're building a municipality that you like and that supports you in what you're doing. Otherwise, just go build and do normal stuff in there that's not an undertaking, because development of a brand new build multifamily, it's an undertaking for people that don't have the experience, that have never done it before. And that's why experience wins 9 times out of 10. And so partnering with somebody on your first one that you're going to do like that is super important. Being able to work with somebody that has done it before. And so, Ben, if you haven't done it before and you're interested, I can hook you up with Daniel to get you involved in working with our inner circle, because we work side by side people that are looking at needing help on projects like that. And if you do have the experience, then even better, and go in and run with it. So, Ben, thank you. Thank you guys for being here. Look, ladies and gentlemen, it's Real Talk on Real Estate. It's Wednesday afternoon. I thank you guys for being here. Again, like and subscribe. Give us a thumbs up. You guys go out and make it a great day. And don't forget to compound your success. Go out and God bless all of you. I was used to my computer in my office with a touch screen.